Hey, good morning. This is Julie, J Auto Trading Strategies. It is Wednesday, January 27th, 7:15 a.m. Central. Um, First, the disclosures. Futures trading contains substantial risk and is not for every investor. Past performance is not indicative of future results. And hypothetical performance disclaimer. No representation is being made that your account will achieve profits or losses similar to those chart patterns shown from yesterday. The markets are dynamic and they change every day. I want to look at the yearly, daily VWAP, and I have the contract VWAP in yellow this time with the fuchsia so that I don't have to flip to charts. So I put the contract VWAP on top of the yearly. You can clearly see that we're still in a downtrend trading below last year's ranging value. We broke through the value. We're continuing to trade low. Our momentum is below the zero line, and we're now going sideways flat below the 38.2 and below the river of gold. So we're actually turning a little bit on this river of gold, which is a little bit scary because if this goes down lower, we're going to hit some of these lower Fibonacci numbers. The FOMC is going to come out today with an interest rate decision, and the market has gone flat pending that decision over the last several days. And I would expect a spike up to get back up into this yearly value low because to me, there's not a snowball's chance in July that they're going to be raising rates. Not after the market flushed down this year and everything else that's going on with China and the political landscape. So just not the right time, and she's very dovish. She said that they're going to take it very slow and steady. So with that said, we are clearly in a downtrend. The market can do anything that it wants to do, but we've had some good earnings coming out. There have been good reports by companies. Boeing reported good earnings, but that was to be expected. They should be projecting good earnings. Iran just got their sanctions lifted and probably ordered a bunch of airlines. So speaking of Iran, I will show you the crude chart in just a moment. Here was yesterday's daily direction guide. It went green right at the open and stayed green, and now we're just chopping sideways. We hit the 78% intraday Fibonacci from the previous swing high low. Check that 78% and that point of control that I was looking for as my target to trade to from the open. Hit that and then went sideways flat. We actually hit it, came up a little bit further, and which is still in the concept of the range, came back down and went sideways flat, creating the point of control, which we're hovering on and just ranging up and down, pending this news announcement. Our yesterday close is up here, so we'll likely get up to there and possibly the yesterday high. But it's not going to be a favorable trade day, and I will not be trading today, most likely, and I'll be watching the markets. If I do see a trend set up, the market's trending, I definitely will get myself involved. But I've had experience with these major news announcements. We have had a decade before the last interest rate hike, so these are going to be very volatile to trade. So I just sit out when the announcements come out and let the market dust settle before getting in, and going into the reports are very choppy. Not a good directional trade opportunity where you can see a direction set up from your direction guide, daily 60-15, and then get your direction guide template setting up in the same direction and then taking an opportunity for a directional trade to a location. Today is not the day for that, so it's just scalping, which can be fun and you can get a little bit of money, but not as much as when the market has got a direction to trade to. So the Unirinco bars, before I switch over to crude, for the E-mini, I have found that the 8:16.98 works very well for the direction guide. I also like the 8:8.98. And here is that. I will show you. Works very well. Um, for me, when a bar rests and goes sideways for consolidation, the bars get tiny and wicky, and you can hold through these consolidations and trail below those pivots because they're pretty good, except for the let me back up. When you're in a retracement, the pivot below is the one to trail up to. So use your super trend indicator for your trail when you get into a trending market, and set your stops behind the super trend. I have a super trend exit on the direction guide template. This is a separate custom solver that I prepared, trend trailing the super trend for myself. That's available. I guess if you would like a copy of this, let me know. But gets you in. And what I like about these Unirincos is the bars will get small and wicky, and is a very good signal that the market's going to be changing direction, especially if you get a red candle. You can get these little white dojis and not worry about it. But once you start seeing a red candle print and the market has gone below the super trend line, just know that the uptrend is over. So the 8.8 Unirinco works very well for the E-mini. Okay, let's take a look at the 4.4. Once you're in an 8.8 Unirinco trade and you got a direction on, then you can come over here and use one of your other filters, either the momentum inflections or just your long direction guide or some other trigger that I've got for you, and time your entries on the smaller 4.498 bar. So use a higher time frame. We'll use your direction guide, daily, weekly, 60, 15. Find your higher time frame to time the entry. Direction guide moving above the super trend is working out for you. And then come down to a smaller time frame. So trading is a process. That's what I'm trying to spit out. And then come into when a bar change comes into effect, then you can flip over and jump into a trade. They don't all work out, but when you're setting up the stacks and waiting for the bar change, and you've got the higher time frame and the direction guide, then your stacks, then that is the right time to get in. But the key is not to jump on these smaller time frame changes, which will whip you out. You want to wait for the higher time frame change. And the 8.8 is a great higher time frame change. I'm sorry, it is early in the morning and that took a lot to get out. So let's look at the crude market. And the crude chart looks very similar to the S&P chart. Yesterday we had a short range up to the previous, actually exceeded the previous range. Well, no, it didn't because the range was higher. We're ranging inside the previous swing. So we're just waiting for that FOMC again. And today we've gone sideways, just like the E-mini. So it's not going to be a good day to trade this market as well. Here's your yesterday close if you want to trade that. for a gap run at the open to scalp up to that. But I'm going to again stay out of the crude market also, and not trade because of the FOMC announcement. I want to talk a little bit about trader performance and a book that I recommend that everyone read, and it's High Performance Trading by Steve Ward. And this is an excellent book. His psychology is spot on for trading and fueling yourself to understand that trading is a process, and that once you've developed your trading strategy and your trade plan, your job is just to execute that with discipline over and over and over, pulling the trigger and setting yourself up for a positive expectancy out of the trade. And with these bloodhound templates, you give yourself a chance to find success because you give yourself the positive expectancy. You wait for a trending market, and then you know to go to that market to trade it and use your candles, your higher time frame candles, to signal the entry, and then going to the lower time frame to execute on that trade. So putting the pieces together takes time. Bloodhound cuts through the learning curve dramatically, and these templates, the way that they set up, if you learn the process and can execute that process, you're so much further ahead of the game than everyone else that has spent their learning curve like I did through osmosis of just paying the market its dues. So find yourself a good trade plan, stick to it, and read Steve Ward's book and others like his book for confirmation that you're doing the right thing in trading and how to manage stress, deal with the losers. You're not all trades are going to certainly be winners, but certainly you're going to get enough winners to keep you moving forward and having, especially if you have a trade plan with a positive forward expectancy, then you can expect those, and then when the time comes, you know to hit those trades hard, and add on. You start small, and then as they continue moving higher and higher and higher, your job is to be sitting there adding a contract, and then closing it out, so that you closing out the add-ons and leaving a runner to continue moving. As long as it's continuing to move in your direction. Your other tools, like I use the market profile, this just hit a low volume node, so that's why it immediately started retracing. Do you see that? This is the GOM MP indicator. I use several market profile indicators, and this red line was a low volume node. You see the indentation right in the middle of that area. So the algos, right in the middle of nowhere land, and the algos know where that is, and they turn on it. Isn't that amazing? So set your charts up, understand where the algos trade to, how they react to certain levels. It could be your Keltner channels, it could be your market profile levels, just like it hit this low volume node, and figure out your cycles, and figure out how and when to get into a trade, and then how to press that trade for a winner. And that is the key to success. When you get your winners, you have to press them for all they're worth. So you want to make that nickel turn into your $100 bill over and over and over and over again. So very good. Y'all have a great day. I'm going to be working on some housekeeping issues today. Shoot me an email, or let me know if I can help you with a strategy or purchase one of the strategies that I have available for you. Thank you so much. Have a good trading day. Bye-bye.